So here, as I said, depreciation, once again I'll repeat, depreciation is discussed under section 32. Okay, and section 32 provides depreciation on following assets, that is tangible assets as well as intangible assets. Okay, so each assets, tangible assets, are categorized into blocks. Okay, and each blocks is given a rate of, what is the rate of depreciation you have to calculate, and that on that rate only you are supposed to calculate the depreciation. On which method? By using the written down value method. This is the only method you are supposed to use when it comes to income tax, when you're computing the depreciation as per income tax. Okay, next, conditions for claiming depreciation. What are the conditions? There are certain conditions you need to be satisfied. So depreciation is allowed provided the following conditions are satisfied. Okay, first condition, asset must be owned by the assessee, the company. If you're calculating the depreciation for companies, then the asset should be owned by the assessee. The asset must be owned by the assessee, that company, or individual. If you are calculating for individual also, the asset should be owned by them. Okay, next, and asset must be used for the purpose of business or profession during previous year. Make a note, this is previous year is very important. The asset, whatever you are using, it should be used in our business, in the previous year. Then only it will be admissible, then only you can calculate depreciation, or else you can't claim depreciation. If you have purchased the asset but you have not used in your business, then you can't claim any depreciation, because you need to satisfy this condition, then only you can claim depreciation. Okay, these two conditions are very important, that is, asset must be owned by the assessee, and next is asset must be used for the purpose of business or profession during the previous year. Okay, am I clear? Any doubts? No. Okay, fine. Depreciation shall be allowed on written down value method. As I said, that the depreciation will be allowed only if you adopting written down value method at the prescribed rate. That also not your own rate. Their rate, whatever they have prescribed, that rate only will be allowed. Okay, that rate only will be allowed. There is no they have prescribed some rate. That rate only will be allowed for the calculation of depreciation. Once first you have to see the condition, whether the conditions are satisfied. If the conditions are satisfied, next you have to see that, next you have to calculate the depreciation on written down value at the prescribed rate, not on your own rate. Whatever the rate is given by income tax, that rate only you have to follow. Okay, next, the calculation of depreciation. This is how the calculation will happen. Okay, for the calculation of depreciation, this is how. So first is written down value of the block at the beginning of the year. So here, when you're calculating, you will not consider the each individual assets. Okay, when it comes to income tax calculation, you will not calculate depreciation for individually for each and every assets. You will be calculating the depreciation based on the blocks. The assets are categorized in the blocks based on the rates. Okay, the assets are categorized into blocks based on the rate of depreciation. If it is 5%, it is considered under one block. If it is 10%, it is considered under another block. If it is 25%, it is considered under one block. Okay, so here when you are computing the calculating the depreciation, what you have to do is you have to calculate a written down value of the block at the beginning of the year. What is the beginning of the year? That is 1st April of the previous year. 1st April of the previous year only you have to consider. So you have to consider the written down value. Next is add assets falling within the block acquired during previous year. Any asset if you have purchased, any asset if it is purchased in the previous year, such assets you have to add. Okay, such kind of assets you need to add it back. And next is less sale proceeds. What is that sale proceed? It's nothing but any sale of your assets. If you have sold any assets during the previous year, if it is, for an example, I have a building. Okay, I have a building and the building comes under 5% category. Okay, 5% category. So I am calculating depreciation here. So I got my after adding my assets, I am getting around 50,000. So I have another building which is comes under 5%. So I am selling that. So that kind of sale you can minus it. Okay, that kind of sale you can minus it. Sold during the previous, subject to the maximum of C. Suppose if I have sold my building, whatever I building example I said, if I sold my building at building 5% block, I've sold it for 60,000 means I can't claim here 60,000. I can claim only 50,000. I can't proceed with the negative balance. Return down value, it cannot be negative value. If I show 60,000 here, it will be a negative value, but you should not supposed to consider the negative value. Okay, am I clear? Am I clear? So 60,000 we have to consider here. So you will be getting return on value. Okay, once after you're getting a return on value, less depreciation. So less depreciation on what rate? For an example, here 50,000 is a depreciation. I don't have any kind of sale. So my return on value for the year, I'm getting 50,000 for this block, 5% block. And so I have to calculate. So 50,000 into 5%, 50,000 into 5%. So this will be my depreciation. So how much? 50,000 into 5%, 2,500. Correct? 2,500. So once after deducting this 50,000, this will be my depreciation for this previous year. So this amount I can claim when I'm computing. This will be the allowed depreciation you can consider under debit side of profit and loss account. Okay, and the next year 50,000 minus 2,500, 47,500. So this will be the opening balance for the coming previous year, next previous year. Okay, for the next previous year. Okay, so any doubts in this? Any doubts in this? Any doubts? This is very important. That's the reason I'm asking. Any doubts here? Shall I proceed? Yes, there is chat. Yes. Sale proceed. Sale proceed is nothing but any kind of asset sold during the year. Any kind of asset sold during the year which belongs to this block category, which belongs to this category. That is, for an example, 5% category. So this 5% is called as block, one block. Okay. Okay, under this block, if you are selling any asset, such asset you have to minus here. Okay, nothing else. Any other doubts? Any other doubts? Shall I proceed or else? Any other doubts? No doubts. Shall I proceed? Please say yes or no.
Sir.
Yes. Yes, sir. Very good. Okay. So when a depreciation is not charged, so not this we have seen how to calculate depreciation normal cases, but sometimes some cases where you can't claim the depreciation. When it is depreciation is not charged in the following two cases, only in these two cases depreciation is not charged. When it is when the sale proceed, that is sale value exceeds the purchase value plus the return on value. When the, for an example, my return on value for the beginning of the year, it is 50,000. Okay, if it is 50,000 and okay, if it is 50,000 and my sale proceeds, it is coming around 60,000. Okay, it is coming around 60,000. Okay, so that time you can't claim depreciation because more than my return on value, my sale is more. So where I have a negative balance, if I minus with this, I will be getting a negative balance only, right? So on my negative balance, I can't claim depreciation. Okay, and this excess shall be treated as a short-term capital gain or long-term based on the asset. Based on the asset nature, we can say whether it is long-term or short-term. Okay. Next case is when E, value of the block before depreciation is positive, but the block does not have any asset. In such cases, in such positive will shall be treated as short-term capital losses. So what is this? So what it is? See here, you have got a E value. You are getting a E value. Okay, you are getting E value of 50,000, but I have sold all the assets. I have sold all the assets, but I am getting a excess value of 50,000. Okay, so for an example, in my entire assets, I have sold for 45,000. Okay, I am getting a positive balance here. I'm getting a positive balance, but I don't have that asset with me. Correct. I don't have that asset with me. So when the asset is not there, how you can consider that as a how you can calculate depreciation for that? So such kind of losses you can treat it as short-term capital losses or long-term capital losses. Am I clear? Am I clear? Any
Sir,
other
can you
doubts?
repeat the second point, sir?
Second point, when the value of the block before depreciation is positive, but the block doesn't have any asset. See here, in this case, for an example, erase it. I'll erase everything. Wait. Okay. So for an example, in the beginning of the year, I have a asset 45,000. Okay, 45,000 returned on value I have. Okay, the block value. And next is I'm purchasing a asset for 5,000. Okay, and the next is, so A plus B is C is 50,000. Next is I'm selling the asset for 45,000. Entire asset, entire block, whatever asset I have, right? I'm selling that. Okay, I'm selling that asset for 45,000. Even after minusing this, I'm getting a positive balance, that is 5,000. But even though I have a positive return on value, but do I have any asset? Do I have any asset? I don't have any asset, right? When there is no
We don't have
asset, when there is no asset, then how you can claim depreciation? Correct. So that is the reason here you can't claim depreciation. So this amount will be treated as short-term capital loss or long-term capital loss. Okay. Am I clear, Jivita?
Yes, sir. And also, sir, that you said first point, if there is a negative value, we don't need to chart depreciation.
Yes, exactly.
So, if you are getting a negative value, should we be writing in the E column or just leave it?
Just leave it. No need. Just leave it.
Okay.
Since you can show it in a bracket if you want. No problem. Just leave it. And that negative value be treated as a gain, because for an example, in this case, see here, my asset worth is 50,000, but I have sold it for 45,000, but still I have an asset. Sorry, I have sold it for 55,000. I've sold it for 55,000, all the assets, but I have a negative balance. Correct. This will be considered as a gain to me, because the actual value is 50,000, but I have sold for 55,000. So 5,000 extra value I have sold, right? So this amount will be considered as a gain. You can't claim depreciation for this. Okay. Any doubts? Any other doubts? Jivita, you are clear, right?
Yes, sir. Thank you, sir.
Okay. Any other doubts we have? Shall I proceed? Okay. The significance of date of purchase affect time on depreciation. Where? So here, an asset is acquired by assessee during previous year. If any asset is acquired during previous year, what we have to see is put to use in the same previous year for less than 180 days, then depreciation respect of such asset restricted to 50% of normal depreciation. What it is nothing but, in the previous year I purchased a asset worth rupees 40,000. Okay, for an example, and this asset comes under 5% category. But I have used in the previous year. The asset was used only for 150 days. It was put to use only for 150 days. So if any asset is used less than 180 days, then when we are calculating depreciation, for that how much we have to calculate? 40,000 into 2.5 percentage, that is 50% of normal depreciation rate. This is normal depreciation rate. 50% of this normal depreciation rate we have to consider. So it will be some amount. Okay, so this is a case only if the asset is purchased in the previous year. If any asset is purchased in the previous year and that asset is put to use less than 180 days, then only 50% of the normal rate, normal depreciation rate, on that 50 percentage we have to calculate as a depreciation. Am I clear? Am I clear? Any doubts? Any doubts in this? I hope no doubts. Shall I proceed further? I think no doubts, right? Proceeding. So here, so these are the some of the categories of assets, the block, as I said, right? So there is a first block 5%, second block 10%, 40%, 10, 20, 30, 40, 40, 15, 25. So mostly in your questions problems it will be given directly, it will be given. If it is not given, you have to see here. Okay, there are some condition, some rates are there. Suppose 5% block, what are the assets comes? Residential buildings other than hotels and boardings. So all the residential buildings will comes under 5% category. Next is 10% non-residential buildings, gardens, office, factory, including hotels and boardings. So you can put it in this way: residential building 5%, non-residential 10%. Same way, temporary construction 40%. Okay, temporary construction 40%. Next is furniture. Any furniture including electrical fittings. If any furniture including electrical fittings, then it is 10%. Okay, and next is plant and machinery. See here in the plant and machinery also there are n number of plant and machinery buildings also, but we have to see what type of plant and machinery it is. Ocean going ships, vessels, speedboats comes under plant and machinery only. Okay, and this will be 20% category. And the next is plant and machinery 30%. What are that? Car, including lorry, bus, and used for hiring purpose, then it comes under 30%. Okay, next is plant and machinery, computers, including software, books owned by the professionals. So 40%. Any kind of books, professional books, annual publication, whether it is annual or monthly publication, no matter what it is, 40% you can claim it as a depreciation. And next is 40% for air water pollution controlling equipments. And next is plant and machinery, oil wells. If nothing is mentioned regarding the nature of a plant and machinery, include motor car not used for hiring purpose, then it is 15%. If the motor car is not used for generally, if they state a statement called plant and machinery, then you go with 15%. If there is no statement, and even if the motor car generally if they mention and it is not used for hiring purpose, if the motor car used for hiring, then only 30. If it is not used for hiring, then it is 15%. Next is intangible assets 25%. Okay, most probably in the question only they'll be mentioning what is the rate of depreciation. If it is not there, you just need to recall it based on the condition. In the earlier days there was a depreciation up to 100% also. Now only they have reduced to maximum depreciation is 40%. Okay, am I clear? Any doubts in this? Any doubts? Any doubts do you have? Okay, so we'll stop here. We'll proceed in the next class. Any doubts you can ask me now. We have 2 minutes, 2 more minutes. Any doubts you can ask me. All of you kindly stop your start your video. Yes. Any doubts here? Or else shall I start asking the question? Then Sneha only is the first candidate. She's nodding her head. Yes, you can unmute, madam.
Yes, sir.
Yes. So what is the rate of depreciation for motor car which is not hired?
Motor car is 40%.
40%. Very good. Motor car is 40%.
No, sir, I don't remember one.
Just now I showed in the notes, right?
I did not take down, sir. I took screenshot. Let me write later.
It is 15%. If motor car is not hired, not for hired purpose, then it is 15%. Okay.
Okay, sir.
And the candidate name called Navya. Student name called Navya. I think that person was discussing so much during the class. Navya, you can unmute yourself, no problem. No. Okay, fine. I know what to do. Mr. Manivannan.
Sashi, sir.
Yes, ma'am.
We can close the meeting, sir.
We can close the meeting, ma'am. Time up.
Yeah.
Okay.
Thank you, sir.
Thank you, ma'am. Thank you, guys.